Micron shed 19% over the week, while futures point up nearly 1%. That split tells you money is trying to tiptoe back into tech, but Wednesday's Fed minutes could break this bounce before it starts. Monday, July 6, 2026. Like and subscribe for daily market updates. Today's agenda: Hook Market Snapshot, Macro and Central Banks, Geopolitical Status, Earnings, IPO and Deals, Closing Summary. Up next, Market Snapshot. Wall Street is back. After a three-day Independence Day weekend, U.S. markets reopened this morning, and the futures are pointing up. It's Monday, July 6th, and the setup is a standoff. The beaten-down technology trade is trying to bounce, with futures tied to the Nasdaq up nearly 1%. But the two things that could make or break this week aren't stocks at all. They're Wednesday's Fed minutes, and the inflation number waiting a week out. Add a fresh move from the world's oil cartel over the weekend, and a crypto market that popped and then thought better of it, and you've got a lot packed into one holiday-shortened return. Let's get into it. But what is really driving all of this beneath the surface? First, where we stand as the bell gets ready to ring. Stock futures are higher across the board this morning. The S&P 500 futures up about 1/3%, and Nasdaq 100 futures leading the way, up almost 1%, while Dow futures sit roughly flat. That mix is the tell. Money is trying to tiptoe back into the technology names that got hammered last week. Rewind to Thursday's close, the last full session before the holiday. The Dow finished at a record, just under 53,000. But the S&P was dead flat, and the Nasdaq fell almost 1%, as semiconductors got crushed for a second straight day. Micron alone shed 19% over the week. Overseas this morning, the picture is split. Japan's Nikkei slipped. South Korea's Kospi fell nearly 1%, but Hong Kong edged higher. The VIX, Wall Street's fear gauge, which climbs when investors get nervous, is sitting near 16, cautious, not scared. And for the big picture, the market just closed its best first half since 2021, with the S&P up nearly 10%, the Nasdaq up 12%, and the Dow up almost 9%. The question hanging over this holiday-shortened week: was last week's tech wobble just a blip, or the start of something bigger? That inflation picture runs straight through energy markets next. The engine underneath all of it is the Fed, and this week we get a look inside its head. On Wednesday, the central bank releases the minutes from its June meeting, the first chaired by Kevin Warsh, and traders will comb them for one thing: how serious the Fed is about raising rates. Because here's the part a lot of people miss: this Fed isn't debating cuts, it's debating hikes. The federal funds rate, the Fed's main lever on the economy, sits at 3.5 to 3.75%, held there for 4 straight meetings. May inflation ran hot at 4.2%, a 3-year high, and the Fed's June projections showed 9 officials penciling in at least one rate increase this year. Then Thursday's jobs report threw a wrench in it. The economy added just 57,000 jobs in June, far below the 115,000 expected, with prior months revised down. A weakening labor market is exactly what stays the Fed's hand. Traders trimmed their hike bets. The 10-year Treasury yield eased to around 4.46%, and the dollar slid to a 2-week low. Even Warsh softened his tone last week, saying inflation expectations have eased, and 2 governors, Waller and Bowman, want cuts outright. After Thursday's jobs miss, futures markets now put the odds of a rate hike at September's meeting at roughly a coin flip, down sharply from the week before. The verdict: prices are still too high, growth is cooling, and that tension defines the week. Watch for one more clue today: the ISM Services Survey, a read on the biggest slice of the U.S. economy. That brings us to earnings, IPO and deals. Inflation remains tightly linked to energy markets, where recent developments are increasingly favorable. Over the weekend, OPEC Plus agreed to increase production by 188,000 barrels per day in August. This marks the 5th consecutive month of output hikes, restoring global supply to nearly 1 million additional barrels daily. Increased availability exerts downward pressure on prices, cooling inflation, a dynamic that aligns with in favor of higher rates Federal Reserve's objectives. This positive trend coincides with another major development. The Strait of Hormuz is flowing freely again as U.S.-Iran ceasefire talks progress and Saudi and Emirati exports recover. President Trump noted negotiations are moving forward. For markets, this represents significant relief. Cheaper energy removes a key wildcard from the outlook. Consequently, the commodity sector softened. Oil remained steady but heavy on Friday morning, with Brent hovering near $72 per barrel in U.S. West Texas Intermediate just under $69, both approaching their lowest levels since late February. gold drifted lower into the low 4,100s, around $4,100 an ounce, well below its January peak of roughly $5,600 as Middle East fears recede, and a safe place to store wealth demand wanes. Silver followed suit. When oil, gold, and the dollar all weakened simultaneously, it signals markets pricing fear back out, a necessary warm-up before focusing on crypto. Crypto delivered a headline weekend with an asterisk. Bitcoin briefly breached $63,000 during thin 4th of July trading, its highest level in over a month, but quickly retreated to trade below the 62,000 handle this morning, while testing the critical $60,000 support line that has held since spring. This unpredictable price swings suggests Bitcoin is currently reacting more like an aggressive proxy for stocks than following its own independent narrative. The initial pop stemmed from Thursday's weak jobs report easing rate hike fears. The subsequent fade resulted from thinning holiday-available cash in the market and a broader tech sector sell-off. Ethereum settled in the mid-17,000s. Among altcoins, XRP led with a clean 5% gain over the weekend. However, structural tension defines this market segment. Exchange-traded funds holding Bitcoin saw record outflows of $4.5 billion in June, pushing year-to-date flows negative for the first time. This shift spooked analysts. Citigroup cut its 12-month price target from $120,000 to $82,000. Even MicroStrategy made a symbolic sale since 2022 after years of holding zero inventory. Conversely, large holders known as whales accumulated nearly $17 billion in just 2 weeks and recorded their first inflows over $200 million on the last trading day before the holiday. Despite this divergence between institutional selling and whale buying, investor mood remains fragile. The crypto fear and greed index sits in the low 20s, indicating extreme fear. This combination, record ETF outflows meeting massive private accumulation, a fragile price bounce, and widespread caution among retail investors, creates a market coiled tight for a macro trigger that has yet to arrive. One quiet positive factor persists. Bitcoin recorded its worst June performance in 4 years, historically often followed by green July gains. Furthermore, a larger capital allocation question looms over 2026. For most of the year, funds potentially destined for crypto chased AI stocks instead. If recent cracks in the semiconductor trade hold steady, some of that displaced capital may eventually seek new homes outside stocks. Finally, let's look at corporate earnings spotlight ahead of SpaceX joining Nasdaq 100 officially before Tuesday open tomorrow morning, specifically July 6, 2026 morning hours, starting around 9 Eastern Time Zone dependent location, specific anywhere globally right now at this very moment currently occurring worldwide simultaneously, everywhere together in unison, perfectly synchronized, timing-wise, exactly how it should be described accurately without exaggeration whatsoever. On the corporate side, keep one eye on the clock today. Index funds are set to buy SpaceX at this afternoon's close, ahead of it officially joining the Nasdaq 100 before Tuesday's open, a forced, mechanical wave of buying worth watching. The stock that told the loudest story last week, though, was Tesla. It sank 7% Thursday, even after crushing its delivery numbers, more than 480,000 vehicles against estimates near 407,000. When a stock falls on genuinely good news, that's the market telling you the good news was already expected by the market. A warning about how much optimism is baked into the high flyers. The real earnings season kicks off next week when the big banks report, so this week is the calm before that wave. Finally, let's turn to closing summary. So here's where we stand. Wall Street returns leaning cautiously optimistic, futures up, tech trying to steady itself, energy and crypto both softer than the headlines suggest. The single biggest risk this week, Wednesday's Fed minutes read in favor of higher rates, reminding everyone a rate hike is still on the table and knocking the wind out of the bounce. The single biggest opportunity, they read softer and risk assets, stocks and crypto alike, get a green light into next week's all-important inflation report on July 14th and the Fed's decision on the 29th. That's the runway. Today's reopen, Wednesday's minutes, then the inflation print. Everything this week is positioning for those dates. If this is the kind of read that helps you cut through the noise, do us one favor, subscribe, and we'll see you tomorrow morning. Wall Street remains cautiously optimistic as futures rise and technology stocks attempt to stabilize, though energy and crypto sectors lag behind headlines. The primary risk lies ahead. Wednesday's Fed minutes could reignite rate hike fears before Thursday's inflation data arrives next week. A fragile tech bounce faces uncertainty, until the central bank clarifies its stance on higher rates early Wednesday morning globally. Meanwhile, whale accumulation of Bitcoin contrasts with ETF selling pressure, creating market tension that may resolve only after a macro signal emerges later in the week. Investors await clarity to determine if risk assets receive approval or face further declines before Thursday's key economic print sets the tone for next month. Thanks for watching Market Pulse Daily.